Hello, welcome to Queensland Economy Watch, the week that was. It's Saturday, the 9th of February 2019. I'm Gene Tunney, coming to you from Spring Hill in Brisbane. What an action-packed week it was. Thankfully, the immediate flood emergency in my hometown of Townsville is over, although a man remains missing in floodwaters south of Townsville, and we know that already 2 people tragically have died as a result of the heavy rain and the flooding. The cleanup has commenced. I saw a damage estimate of $100 million reported in today's Courier Mail, but my gut tells me that the ultimate damage will be much more than that. We'll need to wait to see the ultimate damage estimate, the total cost of the community, and what the impact on taxpayers will be. The political battle has already begun. The opposition leader Deb Frecklington has criticised Premier Palaszczuk for referring questions on the operation of the Ross River Dam in Townsville to the Townsville City Council. This could end up being a very huge political challenge for the Premier, probably the biggest she's faced since the Sean Drabsch-Adani affair during the 2017 election campaign. So we'll need to see how that plays out. Nationally, the big news this week was the Banking Royal Commission, the final report of which was released on Monday afternoon. Generally, I think its recommendations are benign. There is no doubt that some reforms are needed to improve that sector and to make it operate both commercially and also within the public interest. I must say that I never thought that I'd see the day that the former Treasury Secretary, Ken Henry, would have to resign from a job in disgrace. He was a hero to me and to many of my contemporaries within the Treasury, and I still hold him in very high regard. His fall from the commanding heights is instructive of the importance of humility. Personally, this was an extremely busy week for me. I gave 2 presentations on the economic outlook. So one on Wednesday afternoon to Ross Elliott's APP seminar that he ran at the Brisbane Club, and on Friday morning I spoke to the Queensland Major Contractors Association at Victoria Park Function Centre. So the first seminar, that was interesting timing. It was just a couple of hours after we heard that from the Governor of the Reserve Bank, Phil Lowe, that the next move in the cash rate could very well be down. It wasn't necessarily going to be up, so this surprised the markets, and we saw quite a sizable drop in the value of the Australian dollar. Now, over 200 people in the property development, real estate and construction industries attended the 2 events that I spoke at. Regrettably, I couldn't give them much hope for the economic outlook. So let's consider the recent data and information. On Monday, we saw the release of the latest Suncorp CCIQ Pulse survey results. So this is a survey of business conditions and business sentiment, and it's focused on Queensland small and medium-sized enterprises that make up the bulk of CCIQ's membership. So CCIQ, of course, is the Chamber of Commerce and Industry Queensland. We see that the proportion of businesses that is expecting the outlook to be worse, or expecting the economy, the Queensland economy, to be weaker over the next 12 months, that proportion has doubled since December 17. So in December 18, we have a bit over 40% of businesses thinking conditions will be weaker in the next 12 months compared with just a little bit over 20% back in December 17. Also, we saw some disappointing retail trade numbers earlier in the week. These are the numbers for December. This was anticipated. Of course, we knew that December sales were not as great as were expected by, or were hoped by retailers. Particularly in New South Wales or Victoria, we see retail trade falling, and that could be associated with these decline in house prices, which are making people feel less wealthy. And also we have seen the reversal of that equity withdrawal phenomenon, whereby households would say they would use capital gains to finance consumption expenditure. So without those capital gains, we're not seeing the rising house prices are no longer adding to consumption. That's gone into reverse. We also saw a continuation of the decline in residential building approvals. One respected commentator, Pete Wargent, he was talking about recessionary conditions, although he did note that because of Australia's its population growth, we may not end up seeing a technical recession. But certainly, this data, such as these data, are pointing to a bit of a contraction in the building industry over the next 12 months or so. Unfortunately, non-residential approvals in Queensland have not been increasing, and so that's not going to be offsetting what's happening in residential construction. So this is unlike particularly in New South Wales and in Victoria, and over the last couple of years we've seen some trend increases in those non-residential approvals. And also in Victoria Victoria in particular, we saw a big increase in the engineering construction work yet to be done. So that infrastructure pipeline. In Queensland, that's been coming down. So that's something of concern. At the QMCA breakfast event I spoke at on Friday, the QMCA, the head of the QMCA, John Davies, he gave people a preview of what the cover of their major projects report that will be coming out next month. He gave us a preview of what that will look like, and it has a black cover, and he said that's appropriate because the pipeline is not gushing. And I think so. The ABS data, they show that, and also just our expectations of what is coming up and what's been funded and what will actually get developed. Those expectations are not as high as they have been in the past. The state government will often it'll talk about its large capital works program. What is it, $46 billion over 4 years? But if you compare that with gross state product, it's nothing particularly impressive. It's pretty much what you would expect outside of those years when we had the ridiculously high capital expenditure in Queensland as the state government responded to its 3 crises. So this was during the Beattie and Bligh years, when we had the energy crisis, we had the health crisis, and we had the water crisis. So what we're seeing now is just pretty much what you would expect in normal times. It's nothing extraordinary. We need to remember not to be impressed too much by nominal figures. The Queensland government, of course, is constrained by the fact that it has this very high state debt. Our Treasurer, Jackie Tradis, will be very much looking forward to the what I think is the inevitable shorten government, and she'll be looking forward to dollars for infrastructure, particularly for Cross River Rail, to help get that moving more quickly, and also to fund a range of other projects. At the moment, that debt is limiting the state government's options. I did note that there has been some good news. It's not all bad news. I knew that the coal price, for example, has been staying up there, and calling the QRC earlier in the week, I found out that last week the coking coal price was up 3%, so it's back over US $200 a tonne. So this is obviously very important. So I think around at least 60% of the coal that we produce in Queensland is coking coal. So this is the coal that's used in the production of steel. And yes, it's up at back over 200. So that's above the Treasury forecast for coking coal price of around $190 a tonne for this financial year. So let's hope that continues, and the Treasury might have just a little bit more money than it expected. Coal and also LNG have been making extraordinary contributions to state exports, and we now see state exports being around $82 billion per annum, and that's compared with $50 billion 2 years ago. It's absolutely extraordinary growth, and you can see from this plot here, you can just see the big contribution made to that growth. Well, that's over 1 year though. So I'm comparing 2017 and 2018. You see the big contribution there made by coal and LNG. So LNG is in that confidential category, along with sugar. It's confidential because the ABS recognises that if it publishes with those data, you can link them back to particular companies. There's only a handful of companies producing in those commodities. I also noted that international visitor spending has been up, so partly that's a result of the Commonwealth Games, but I generally think that tourism is a positive, and so that's helping out areas such as the Gold Coast and Cairns in particular. Now the Treasury in Queensland, it's been forecasting fairly modest growth already for Queensland, which is you'd say is a bit, either around or a bit below the trend rate of growth, and similarly the Australian Treasury has too. Based on the recent data, I would suggest that these forecasts may need to be revised downwards, so we'll need to see what happens with the budget updates. With the we'll get the next budget update for Australia, so the national update, quicker than for Queensland, because the federal government needs to release the budget in April in the lead up to the election, which everyone is expecting for mid-May. So to conclude, the Queensland economy is definitely not hot. So I've used this terminology because the presentation I had to give on Wednesday, that was in a seminar titled Queensland Hot or Not. So I said at best it's lukewarm. The infrastructure pipeline is not gushing. There doesn't seem to be a huge amount of infrastructure spending that's going to come in and boost the economy. That said, there are some sectors that are doing well, such as tourism, mining, and health and social assistance, i.e. the NDIS. And I concluded my talks by saying that the international outlook is not good. We know that China is slowing. We know that Italy is in recession. Deutsche Bank is forecasting that Germany will slide into recession. Mark Carney, yesterday I learned about this when I hopped up and looked at the Financial Times website. Mark Carney, the governor of the Bank of England, is saying that they expect there's a 25% chance of a recession in the UK, and that's assuming a favourable, not a catastrophic Brexit. So there's bad news coming in from everywhere. One bit of bad news that struck me was data from the car manufacturers, where we've seen big revisions or big shortfalls in profits from what was what they experienced the previous month or what was expected. GM, it's down 8% in quarter 4. Daimler, which manufactures Mercedes-Benz, 28% drop in 2018. Toyota, 81% in December. I'm sorry to be so pessimistic, but this was not a week filled with good news. Thank you for watching.